All right, people, let the good times roll. We've got market downturn today. I'm recording this on March 3rd, 2025, and the Dow Jones took a big dump today, 649 points into the red. S&P 500 also down another 1.7%. Percentage-wise, that was even a bigger drop than the Dow Jones. NASDAQ even bigger, down 2.64%, and Russell 2000 down 2.8%. So we're going to see what happens on the 4th. But the fears of tariffs have arisen. And we know that the top 10% they control about half the stock market, basically. So that's why you saw the big sell-off. It's the top 10%ers. It's not the little investor hitting the sell button in their Robinhood accounts. It's not that. It's the top 10%. The big mega institutions, the investment firms, and of course the billionaires all getting together deciding to sell. So will it continue? We will see, but we also have threats that Social Security payments could be disrupted. Can you imagine the pain that would come out of that if Social Security, even one or two missed paychecks, so many of these seniors and retirees living just on the financial edge? We're going to talk about that. Also, there's warnings out there saying prepare for a big blow to the auto industry. In other words, prices are going to rise. So it's really a blow to the buyer. Because the dealers, they're not going to suffer. They're just going to raise their prices to make up for the higher costs of the imports and the tariffs. But the buyer, the purchaser, is going to be the one paying the price here. So let's go ahead and get into it. Please make sure you're subscribed. Button right there. I think I'm pointing to it right there. Let's go ahead and get started right here. And there is a report saying the tariffs on Canada and Mexico could surge car prices up to $12,000. So up to a $12,000 increase in the average price of a car, and that's new cars. And what that is a report from Anderson Economic Group, an automotive research and consulting firm. The increase would be 3 times that for an electric vehicle, and the cost would likely be passed on to the consumer. What did I just say even before getting into this report? Of course, the consumer is going to pay the price. The dealer is just going to raise their price, and everyone else is just going to raise their price. So the consumer is going to have to get a bigger loan. In this case, quote, that kind of cost increase will lead directly, and I expect almost immediately, to a decline in sales of the models that have the biggest trade impacts. Patrick Anderson from that consulting, from that research group came out and said that. The average transaction price last month was $49,740, almost $50,000, folks. Hefty tariffs are set to take effect on Tuesday. That is probably the day that most of you are watching this. That's going to be March 4th. Experts are warning the taxes could worsen price hikes across the auto industry. The planned tariffs have sent auto executives into panic mode. Ford CEO Jim Farley warning last month that it would blow a hole in the U.S. auto industry like we've never seen. So that's a warning that we talked about here from Ford. So we've got these industry insiders, research groups, the Ford CEO saying this, right? So are they all wrong? Or should we expect much, much higher prices for automobiles and lots of other things, because we're a country that doesn't really manufacture very much. We import most of our goods. And we just saw the biggest trade deficit of all time at the end of the fourth quarter in 2024. So things continue to get worse as far as our dependency on imports in foreign countries. All right, now here's what's happening with the electric vehicles. Why are they saying electric vehicles are going to cost so much more and go up so much more in price? Tesla produces all of its U.S. sold cars on domestic soil in the U.S., but they contain about 20% of parts that come from Mexico, according to the National Highway Traffic Safety Administration. So it doesn't seem like that much. If all the cars are sold that are sold in the U.S. are made in the U.S., it seems like Tesla would be one of the winners in this. And maybe that's what they wanted, right? Automakers will feel even more pain as they're forced to end the production of some vehicles, which will further hurt sales. Now, the plan is, out of the administration, the plan is that all these manufacturers, or a lot of manufacturers, are going to come back to the U.S. But my concern is, and my word of caution is, knowing that this all could be reversed in 4 years, right? New administration comes in, changes everything back to the way it was, meaning no more tariffs, right? And these companies are just going to go send the jobs back overseas, or maybe they'll never even come back to the U.S. because these companies know that in 4 years, everything could be flipped 180 degrees the other direction. You know what I mean? Am I making sense? Am I sound cuckoo? Please let me know down in the comments. Let's go on to some other news here, folks. More on tariffs, but the Social Security payments are under threat, according to some individuals and insiders. Look at this. Social Security has never missed a payment, but the Doge actions and the audits, etc., threaten interruption to benefits. And it goes on here, CNBC, the continuity of monthly checks for millions of Americans could be at risk following changes under the Trump administration, and that's former Commissioner Martin O'Malley. But the recent actions at the U.S. Social Security Administration, because of the efficiency efforts, are putting monthly benefit checks for more than 72.5 million Americans. Wow, 72.5 million at risk. Ultimately, you're going to see the system collapse and an interruption of benefits, unquote. That's a quote. Ultimately, you're going to see the system collapse and then interruption of benefits, unquote. Even I've never said something that scary, and that's scary. If 72 million people don't get their checks, these people can't just go out and start working new jobs. You know, a lot of retirees, a lot of elderly people. And he says, quote, he continues, quote, I believe you'll see that within the next 30 to 90 days, unquote. So we're going to remember that. We're going to see if this actually plays out. I couldn't imagine the current administration being crazy enough to allow this to happen, because that would pretty much be the end, because there'd be so much pain, there'd be so much fallout from that, and some people wouldn't even survive. I mean, you miss a few meals and you don't get your check, you don't get your medications. There could be all kinds of problems that unfold. So I don't think this is going to happen, folks. People often call me doom and gloom. They say I'm negative with my forecast or my predictions or my outlook, if you want to call it that. But look at just some of the news, what some other people are saying, bro. A lot of these other people are saying stuff that's way crazier and worse than I've even said here in this channel, as far as like predicting a bad economy or people losing money or people going broke, all that stuff. But the things I have predicted, we've been pretty right on point. I said homelessness for years now is going to continue to get worse. And we haven't seen a year in 5 years since I've been doing this, 2019 when I started, maybe 6 years. We haven't seen a year that homelessness declined. It's always gotten worse. And inflation's always gotten worse. We haven't seen prices dip down overall. Now, there's a couple areas where you could say it went down year over year briefly, like vehicle prices came down from their peak in 2022. Some cities' home prices came down from their peak in 2022, 23. But overall, prices are up and things are getting more expensive. The cost of living basically getting worse across the board. And regarding the warning about Social Security payments, he said, ahead of any interruption in benefits, he said, quote, people should start saving now. So stop wasting money if you're dependent on Social Security. And the scary part is a lot of people aren't wasting money. They're just buying necessities. They're just paying their electricity, paying their heat bill, their light bill, their home insurance, car insurance, food. And by the time they're done, and maybe rent, unless their home's paid off, taxes, by the time they're done, they may not have any to save. So he's telling people to save. A lot of retirees don't have people or don't have savings. A lot of these people, retirees, I'd have to guess, if it's 70% living paycheck to paycheck overall, I would say with retirees, it's probably even higher, right? I haven't seen a study on that. But if you've seen a study, please let me know. I think it's way more than 70% of retirees living paycheck to paycheck. All right, but then again, you have a lot of them that paid off their house decades ago, and they don't have a lot of overhead. So it depends. It's probably a mixed bag, but we'll see how it plays out, folks. Here's another article. 1 in 5 Americans are doom spending. Doom spending. This is a real article, folks. 1 in 5 Americans are doom spending. What does that even mean? What it says here is they're concerned about the coming tariffs. So people were front-running the tariffs, basically. They're trying to get out in front of them, trying to buy goods before the tariffs hit. Those fears are causing consumers to spend even more than they would otherwise. Doom spending is one way to put it. I thought it was going to be making like fallout shelters, bomb shelters, stuff like that. While sweeping U.S. tariffs go into effect, the Americans are concerned about the cost of goods and that prices will rise further. 1 in 5 adults are doom spending, making impulsive purchases driven by fear and anxiety. Well, what happened to saving money? Wouldn't having more money in savings be less fear and less anxiety? So you want to go out and spend it and have less money in savings? I don't get that, but that's a real article, folks. Another CNBC article. And now, are you ready for the ultimate doom and gloom? No, it's not me. This is Mr. Warren Buffett, your friend and my friend. Warren Buffett says tariffs are an act of war to some degree. An act of war. So, folks, things are they about ready to get serious? All right, and then we have reports out there like this one. 75% of financially pressured consumers turn to pay later plans. And this is when you go to buy something, and I'm sure most of you have seen this. You buy something online, and they say you can pay this in 6 easy payments. Well, most people are already doing that on their credit card with most purchases. So now you buy something on your credit card, which is usually paid off in payments, right? Some people paying it off in full. So you finance something basically on a credit card, and then you have 6 payments to make on top of putting it on your credit card already. So it's like you're financing the financing. I know that sounds crazy, but you're already putting it on a credit card, so you're financing it essentially. And then you're financing the financing because you have a payment plan to be paid on top of that. All right, so to put that into perspective, imagine making your car payment with your credit card. So you're paying off debt with another debt instrument, in other words, right? Crazy. And it's worldwide, folks. Here's another example. People are angry. Japan faces for new, unknown, prolonged inflation. It's not just the U.S. This system of money is global, folks. A country that suffered from deflation for decades is now experiencing a sustained rise in prices from basic items ranging from rice to soap. All right, let's break it down a little bit here before we get out of here. I see a balancing out here of things. I don't think we're going to see massive inflation. I think we're going to see inflation, but I don't think it's going to be massive. I think it likely will be offset by all the huge job cuts to some top earners, right? Remember these workers that are getting laid off. A lot of them were in the top 10% because you see that federal wages for federal workers are on average much higher than the private sector. So could that be the lower or the drop off in spending that keeps prices from rising, right? We're going to see how this plays out, folks. I'm being cautious right now. I'm not going out and buying a home. I'm not making any new investments right now. Sitting back, waiting with popcorn, folks. I think a lot of you might be doing the same, but otherwise, let me know down below. Am I missing out? Are you in it? Are you jumping into this as an investment opportunity? Even the big boys, even the big monies, the whales are selling right now with today's sell-off. We're going to see what happens, of course, on Tuesday the 4th. Hope to see you back here again at that time. Everybody, as always, keep stacking. Bye for now. Peace.